Hello, and I'm so excited to be with you today. So, I have brought to you the records you have asked of your balance sheet. And I'm just going to say I'm so excited for this opportunity to help you. And I'm so excited that you're able to get approved for this loan to really expand your business. It's such a great opportunity that you have. And with that today, I was looking over your balance sheets and I noticed some errors that needed to be added in because we got to make sure this stuff is correct. We can't have any creative accounts because all creative accounts are in jail, and I want to set you guys up for most success. And so today I started looking at your old balance sheet and I broke down and what was missing, and what was missing was some earned but unbilled general service for $5,000. Now that's a big difference. And so when I was doing your old balance sheet and that we have there for you, that I have right in front of you, this is your new one that I have created. And with that, we have now your account receivable has now been up to 14,000. So because of that, we were able to make sure you're having more money to help you get approved for this loan. And we just did that because we had to add on the amount, because before it showed 9,000, so we just added the 5,000 to that, so we have 14,000 in, and then we took your janitorial supplies and we made that to 2,500 because that is how much you have on hands. And so we were able to bring that, we brought that down a little bit, but it's good. And if you have any questions along the way when I'm talking, or if I'm talking too fast, or if you don't understand something that I say, no worries. Feel free to ask me any questions. Accounting stuff, can be difficult and it can be boring. So I'm hoping that I can give you the information you need to go get approved and answer all questions that you have, and that way that I can do it in the best way, but also make sure it's efficient for you. And so after that, we have your prepaid insurance. It was actually a 2-year policy, and it was not a 1 year. So instead of having to pay for 1 year, we doubled the payment and that means your assets go up, and because now you have it for 2 years. So good for you. You don't have to worry about that. And then we had to do December expense that was unpaid for 300, and that is right here. We had to add that in. There was an expense that we missed last time doing it, and so we had to add that in to make sure that everything adds up. The amount, or the interest, so we also actually needed to add in also the interest of the bank loan that was not recorded. And as you look at my Excel file that I have right here, you can see that the interest is right here, and it's about for $12.50. So, and it's that high because you have an interest rate of 10%, and so it's charging a little bit more than usual, and it's splitting it between the 2 years. The amount capital was report accumulated authorized 4,000. This we had to add in, we had to fix. We had to mix up when we were adding this in, but we were able to fix the amount on it. And then the cleaning equipment was 5,000. We had to get the cleaning equipment and the 5,000 for delivery truck. That was not added on there. And so see, we've added in the 5,000 for right here, or not really, right here for your truck and what you've earned. And as you can see, we just kind of have fixed what you have. And now that I've kind of broken down like what I've added on to your balance sheet, I wanted to talk to you a little bit more about some good news. And the good news that I have for you is that your business liquidity is doing well, is that you are earning faster then you're losing money. And with this balance sheet, you have enough money to pay off the loan on time, so you don't have to worry about any extra late fees that be come in. And the good news about that is that with the money you're making, you have these total assets that you have here, and we're able to subtract that from your total current liabilities, and or you take your current liabilities and your current assets, and that if you subtract that, that's the formula that we get for your working capital. And your working capital is just shows like how much money you're gonna be able to work with and that you need to keep your business going and staying alive. And this allows us to to make money at a faster rate. And then we can also look at our total assets and then subtract that from our total liabilities. And you're doing really good. We have you're in the clear. You're over at least over 20,000 higher up, and you're gonna be able to make. I said you're gonna make that loan, and you're gonna be able to do it without any sweat, any nerves. You will be clear, and the reason why your loan is so high is because of the interest rate. They it takes a lot to start building up your company, and you've been doing a great job by yourself. And like I said earlier, I'm excited for you to be able to bring on more and add more employees. But this process takes the bank wants to make sure that they're gonna get paid back, and they want to make sure that they honestly want to take advantage of your success. So you're going to be successful. You are successful right now, and you're making more money. And so we need to allow ourselves to get there by they take this money out now. They know you'll pay it back in years, and they have the interest rate to they have a little safety blanket. But because they know that you're doing so well and how much you're taking out, they want to make sure it's paid back faster and not wait any longer. And that is how's the report. And I just wanted to know we are good to go. You will make your first payment. And thank you for your time with me. So if you have any questions, just let me know. And thank you for your time. Have a good rest of your day.